Hi guys, this is Chrissy,
Hi, I'm Gavin Guthrie.
and we are here for Mortgage Monday. And if you guys remember last month, well, a couple months now, we've been talking about our friend Bob and our friend Tim. We wanted to jump into what everyone's been talking about, the buzzword in the news, which
The
is
impending recession.
the doom that is
doomsday,
coming.
yeah.
So we wanted to break that down with an example and then talk to you guys about what that really looks like. Like, what does that mean? What is recession? I know it sounds so scary.
Yeah.
But
Yeah. So we kind of did some rough numbers. So we had Tim and we had Bob, and Tim was always the unfortunate guy. Made some bad decisions. Bob has been our smart buyer, our smart homeowner. He's done some good things along the way. So I've heard a lot of people talk about, like, you got to sell now while the market's high, cash in, get your money. The hard part about that is, like, you have to live somewhere. So if you're going to go buy another home, you just sold your house at the top of the market or at a high point in the market, you still have to go buy another house that's going to be comparable. You know what I mean?
Yeah, that's something everyone
You're going to
needs.
pay that same high price.
Everyone is going to pay for housing.
Yeah. So, Tim, he's our guy that he's probably going to look to panic sell, or he thinks he's timing the market perfectly, and he's going to say, okay, well, I'm going to get out now, get my money, and then I'll rent for 3 years, and then when it bottoms out and everything tanks, I'll be able to buy again and buy lower. And there's some, there's some misinformation there. It's just not a good idea. Yeah. He's going to try and time this market. He's going to sell it, but then he's going to rent. So
let's take it to numbers. Let's just say Bob and Tim now, we're at, let's just say their homes are worth $350
each.
We're at $350 right now, value right now. So we have Bob who's like, okay, I'm hearing this word recession, like these flashing words everywhere in the news. It's coming. I'm going to do my research. I'm going to see what's going to make sense. Whereas Tim, what's Tim going to do?
He's gonna fire sell, or he's gonna sell it now, thinking he's timed the market perfectly. So
perfect. He's at the top.
Yeah.
He's going to make a lot of. He only paid however much for this house.
Yeah. So we did a little bit of digging, and we looked at the last 5 recessions that we've seen. And of the last 5, really the only impactful drop in the housing market, was 2008, the one that's the most fresh in all of our minds, where, homes were lost, everything went down. We all felt that. But of the other 4 recessions, there was no significant drop in the housing market, and it actually continued to grow in some of those recessions. So housing has been strong during recessions, and I think low rates and other things play into that. So I think that's what we're going to experience. I don't foresee some massive drop in the housing market. So Bob he's our smart homeowner, and if he continues to own his home, $350,000 home, and let's go very conservatively, if homes appreciate at 2%,
which is very minimal for the last.
That's pretty minimal, and I think we're projected for more.
Yes, we are.
2% for the next 3 years. He is going to gain $22,000 in home value. On top of that, he's going to be paying down the principal on his mortgage over those 3 years. So, you're talking a net of probably $35,000 in equity that he's going to, additional equity that he's going to build over the next 3 years.
So just breaking that down, like $350,000, that just minimal 2% for the first year, we're talking $7,000.
Yeah.
That's 2%, which is extremely low as an estimate. So the second year, because this is fancy math and this is what Gavin did, so it's a little over $7,000 because that new value is.
You're going to get 2%. Yeah, $357. You'll get 2% on that.
Compound interest, one of those fancy things in math school that I didn't pay attention to. So that's $22,000.
Yeah.
So that $350,000 house at the end of 3 years.
You're over $370.
We're over $370, and he's paid down his principal.
Exactly. So it's a big net gain for Bob there. That's the smart homeowner. You have to live somewhere.
Yeah.
You're going to be paying someone's mortgage.
Yes.
So, Tim, our other homeowner, he's going to time the market. He's going to cash out, say he makes a little bit of money, and sure, he's going to be happy. But if all he's doing is taking that money and then paying rent, paying someone else's mortgage for the next 3 years, he's truly throwing it all away. Maybe he's smart and buys Bitcoin or something, does something with that money.
Yeah.
Maybe. But it's not that sure bet that housing has been historically.
So say Tim, he's panic sold, he cashed out, he feels good, he's got this money, and he wants to live in the same kind of home. A $350,000 home is going to rent for around $2,000 a month.
Yep. And
so in the very first year of renting, how much is Tim going to pay?
Yeah, that's $24,000 he's going to pay. Yep. So, you're just throwing away money.
He's taking his equity that he just cashed out on and putting it towards somebody else's mortgage.
Exactly.
Honestly, that's what we're looking at.
Paying down that principal for someone else instead of his own.
So makes sense using those numbers. So be like Bob.
Yeah, be like Bob.
Hashtag in right
hashtag.
Now.
I think there are a lot of differences between what we are experiencing in this market and what is all so fresh in our mind. And I think that's why there's so much fear and worry about this recession.
2008 was scary for a lot of people.
It really was. And so there were some things that were different back then, especially housing related. Obviously, the valley in Arizona, I think, was overbuilt. We had too many houses. Okay. So too many houses, too much construction going on. You had people getting loans that could not prove the ability to repay that loan. Okay. They didn't have the income.
Like the word of like, I make money.
I'm a janitor and I make $200,000 a year, so I need this.
I love that job.
You know, so that caused some problems as well. And then you had speculation and you had investors that were driving growth. Okay. It wasn't demand. It wasn't the need for housing. And right now, that's what we have. We have demand. You have an influx of jobs coming in. You've got some really good companies that have moved to the valley. That brings employees and they buy houses. Yes. And you've got construction that really has not kept up yet with the demand. And so we have really low supply, high demand. We've got low rates right now.
Very low rates.
All of these things I think will continue to push home values up, home prices up. So we've got some good things going on in the market right now. Obviously, no one's recession proof. But I do think we have a lot of great things, and the biggest thing is that we've just got a solid job market right now, super low unemployment. All of those things are really going to protect our housing market.
Yes. So we're not anticipating a crash. Even the market experts aren't anticipating a crash in the housing market. Yeah. So recession, when you hear that word, you really need to know what it means. You need to look at the numbers, do your research, talk to an agent, talk to a lender, just see what are we looking at in terms of your specific situation. Like, where are you at? Sometimes it does make sense to sell, and if you guys want to go up, interest rates are great. You can build more equity in that way, but don't be like Tim and cash out and panic and then rent. Throw that money away. Yeah. So, because that's such a shame. In the first year, he's going to throw away pretty much all that he's made over whatever, I forget where we left Tim with. Poor Tim in his house.
Poor Tim.
So, but really for Bob, just going back to those numbers, building his $350,000 house just by living in it up to over $370,000. Yeah. And building that equity. So, in 3 years, he's sitting pretty. Yeah. So, I think that's all we have for you guys today. I'm Chrissy. You can find me on Facebook here at this channel. And then Gavin, you can find at...
Gavin Guthrie at Citywide Home Loans. And then on Instagram at Loans by Gavin.
Perfect. And so thank you guys so much for watching. Be like Bob.
Thanks.